Wall Street just can't stop buying Palantir. Why are they doing this at an all-time high price? Institutional ownership is now the highest it has ever been. Even short interest is slowing down and they're getting scared. Does Wall Street know something we don't? What does this mean for Palantir investors? Well, let me explain. Disclaimer. According to recent reports, the number of institutions that own Palantir has been steadily increasing. This is in stark contrast to what usually happens when a stock price goes to all-time high levels. So, what's actually happening? Some people might be thinking that institution buying should be slowing down anytime soon, but it seems like that's not happening in the short term. As of now, Palantir's institutional ownership has grown to over 1 billion shares. Considering Palantir has a little more than 2.2 billion shares, it's impressive that institutions hold almost 50% of the company's stock. This shows that major players in the financial world are confident in Palantir's future. So what does this mean for the company? With so much institutional support, Palantir gains several advantages. First, it suggests that large investors trust Palantir's long-term vision. Institutions don't usually invest unless they see solid growth potential. Palantir's AI and data platforms are appealing because they cater to a growing need in both the government and commercial sectors. Another key factor is stability. When institutional investors hold nearly half the stock, the company sees less volatility. Big investors don't sell shares as quickly as retail investors, making the stock more stable in the market. There's also the belief that Palantir is positioning itself for more growth. Institutions are betting on future profits as the company continues expanding into AI and machine learning. This level of ownership reflects the idea that Palantir could soon be one of the biggest tech companies. And what's even more interesting is that this move by the institutions could put the new all-time high price of around $60 could be the new low. This represents a historical event in the company, if this actually holds for the long term, which also means that Palantir can only grow from this point onward. Of course, we still have to see what the future holds for the company. But as long as they maintain their growth and keep their current clients for the long haul, they're on the right path. This bullish sentiment by the institutions is also shared by well-known analyst Mike Lee. In a recent interview, he is doubling down on his view of Palantir as a once-in-a-generation opportunity. He believes the company is positioned to lead the next big wave in tech. In the past, he joked about how missed out on the Microsoft MS-DOS to Windows revolution, which was a game-changing supercycle. And so did tons of people who didn't believe in the potential of Microsoft. However, this time around, he's not going to miss out. He sees Palantir as a crucial player in the AI and data space for this generation. According to Lee, Palantir is looking like it's going to be as big as Microsoft was when nobody believed in the company. He's confident that the company's advancements in artificial intelligence and machine learning will drive massive growth, making Palantir a key player for years to come. In line with the growing institutional interest in Palantir, several large funds have recently added significantly to their positions. Here's some of the most notable ones. These aren't small numbers, and the increases reflect strong confidence in Palantir's future. Hear this out. Rumbline Advisors, a $122 billion fund, boosted its Palantir holdings by over 48%, adding more than 1.3 million shares. This brings their total to more than 4 million shares. Interestingly, they started with just 10,000 shares and have steadily accumulated more shares almost every quarter. They held on through thick and thin. During the 2021 sell-off and into 2022, the fund held onto its shares while the stock dropped and continued to dollar-cost average into the position. Tracking how medium to large funds start and build their positions reveals growing confidence in the company. Another fund would be O'Neill Global Advisors. They just started a position in Palantir with over 500,000 shares. For a fund of this size, Palantir could soon make up 10% or more of their portfolio if the stock's current pace continues. The biggest recent move came from Geode Capital Management. The $1 trillion fund increased its Palantir holdings by more than half of what they own, adding 16.5 million shares. They now hold almost 48 million shares in total. Geode has been steadily accumulating Palantir stock every quarter, reflecting a long-term belief in the company's potential. The implications of this growing institutional support are significant. When large funds like Rumbline and Geode increase their positions, it signals strong confidence in Palantir's future growth. Institutional buying often pushes stock prices higher, benefiting all shareholders. As more funds accumulate shares, Palantir becomes more stable, since institutions typically hold onto their investments longer. Even during times of volatility, major players are clearly betting on Palantir's long-term success. As a result of these major institutional moves, it appears that short interest in Palantir has slowed down significantly. The short interest has dropped by about 10 million shares, or minus 10%. At the moment, short interest stands at around 85 million shares. This decline aligns with the fact that too many institutions have been adding Palantir recently, and the potential inclusion of Palantir in the S&P 500 has played a role as well. So what does this mean for the stock? When there is less shorting of a stock, it generally means less volatility. Palantir could now be facing a lower valuation range as a result. Some big traders are also pushing against short sellers. These traders have the ability to move large blocks of 10 to 30 million shares whenever they choose, which makes shorting the stock even more difficult. While 2023 and 2024 have shown strong performance for Palantir, 2025 may see more consolidation as the company stabilizes and strengthens its position. Traders typically buy low and sell high, while retail investors sometimes do the opposite. So, with Palantir less likely to be as volatile, big traders might move to more active sectors for the time being. Initially, some expected short interest in Palantir to rise much higher. However, the increasing institutional purchases seem to be sending a clear signal that shorting Palantir may no longer be worth the risk. Those tracking these institutional moves would have enough reason to avoid betting against the company. Over the past couple of years, many have pointed out that, with Palantir's current margin rates, it's simply not worth it to short the stock. Even when the stock consolidates, short sellers would still have to pay interest on their short positions during that time. For traders looking to short, it might make more sense to target companies with declining or weakening fundamentals. Palantir, with its steady institutional support and improving prospects, is not an easy stock to bet against. As the stock stabilizes and grows, it becomes increasingly clear that shorting Palantir may not be the best move going forward. Adding to this, the Swedish government has just announced a new partnership with Palantir to develop advanced defense technology. This collaboration includes several other companies but highlights Palantir's growing influence in the defense sector. With Palantir securing such high-profile partnerships, it's clear that the company is expanding its reach. This news is likely to cause even more short sellers to rethink their positions. As Palantir continues to secure major deals like this, the fear that the company will keep growing becomes more apparent. Short interest has to slow down because the company is proving its strength and long-term potential. With the Swedish government now working with Palantir, it adds another layer of credibility to the company's growth story, making shorting it a much riskier bet. Palantir has also secured several new patents, which signals even more growth for the future. These patents suggest that Palantir is preparing to release new products, further expanding its technology offerings. As the company continues to innovate, these future products could open up new markets and strengthen its position in the tech and AI sectors. And here's an insight to this recent growth of Palantir. The driving force behind Palantir's growth can be traced back to something Alex Karp once shared in an interview. He explained that Palantir is working to achieve both high margins and high growth, a strategy that sets them apart from other companies. While many businesses focus on either growth or profitability, Palantir aims to succeed in both areas. On the Q3 earnings call, Karp emphasized this point, stating that they are not choosing between high margins and growth. Instead, he believes they complement each other, fueling the company's success. But what do you think about this? Let us hear your thoughts in the comments. If you are curious to find more, then make sure to click on one of the videos you see on the screen. And with that, we come to the end of this video. If you enjoyed the video, then turn on the notifications bell on this channel. Missing an important Palantir update might make you lose money, so don't risk it. Also, please share this video with as many people as possible. Let's get this news out there.